Hello everyone. This should be a fun episode for all the spreadsheet nerds out there, and also for those who like to take the time and effort to verify and understand the underlying math on their own. For anyone else, I'll give a giant spoiler right off the bat. To make money on a trade, the percentage change between the buy price and the sell price must be greater than the total applicable fee rate of the buy and sell transactions combined. That's it. Simple, right? Now, if you're still here, let's take it very slowly, step by step, and figure out exactly how to find the break-even point in a trade. Maybe I am reinventing the wheel here, but I want to personally go through the motions to gain a deeper understanding. Just like in geometry at school, everyone knows the Pythagorean theorem to be true. However, you are encouraged to walk through a proof or two on your own. I've put together this lovely spreadsheet and I will walk you through it and its evolution. First things first, any calculation requires some inputs. I was thinking here as a complete layman, so I took the inputs that are understandable to anyone who has ever bought or sold anything. I have split the input variables into two categories, main and supporting. The main ones are the mandatory minimum, and the supporting ones were added on a bit later to make it easier to operate my spreadsheet. Firstly, there's the buy price in USDT. It's the same one you either get automatically in a market buy order or you type in yourself into a buy limit order. Next is the markup in USDT. The golden rule of trading, as you know, is buy low, sell high. So this is exactly how much you add on top of your buy price when you sell. Next is the buy order size in USDT. It is the same one as here in the order form, meaning how much you want to spend. I deliberately use the USDT value as opposed to the asset value. USDTs are easier to understand, and the fractional values of BTC are not really that clear. And if you change the trading pair to something that you're not used to, your brain is going completely into uncharted territory. Lastly, here we have the Binance trading fee rate. I'll explain later when it becomes relevant in the context of the spreadsheet. The way this main area works is that I have 20 lines to see 20 slightly different variations of the same trade scenario all at once. This will make it easy to find the break-even point since this is exactly what I'm looking for. To introduce these variations of scenarios, I have two supporting variables, the markup step and the buy order size step. With the markup step, I am able to gradually adjust the markup in each line, and with the buy order size step, I am able to adjust the order size in each line. Trust me, it will become quite clear once you see how the whole thing works. So the first three columns are color-coded inputs. Buy price always stays the same and is propagated to all lines. The markup is copied to the first line, and then the markup step is progressively added to each subsequent line. This is what it looks like for markup value of 10 with different steps. Same story with the buy order size and its respective steps. I will be using the markup variations and the order size variations one at a time, leaving the other step at 0. Otherwise it becomes confusing and not really informative. Let's quickly run through the values calculated based on the main inputs. Sell price is easy, it's the buy price plus the markup. The price change, as explained earlier, is the percentage difference between the buy and sell price. Here is the formula. The quantity of coin is not all that interesting by itself, but it is necessary for further calculations. It is equal to the order size divided by buy price. Here, of course, I am assuming that in the trade we are selling all the coins that we have bought. Hence, the buy quantity and the sell quantity are the same. Next, the sell order size. It is how much USDT we are getting back for selling the whole quantity of coins at the marked up price. The gross profit is the additional USDTs we are getting from the trade before fees kick in. It can be calculated in two ways with the same results. Either get the difference between the sell order size and the buy order size, or, as I've done here, take the quantity of coin and multiply it by the markup. I used conditional formatting here to indicate a profit or a loss. Looks great so far, but now we have to talk about fees. BTC USDT is at the moment the only traded pair with USDT as the quoted asset where Binance offers 0 fees. Trade anything else and you must account for fees. Here is the fees page on Binance. It is important to know that the fee is charged for each individual transaction. So in a complete trade you get charged twice, once when you buy and once when you sell. Keep that in mind. There is also a discount for using Binance's own BNB coin to pay the fees. To take advantage of it, of course, you must hold some BNB. However, for the sake of this exercise, I will use the worst-case scenario on the fees to find the minimum viable trade that works in all circumstances. Later, this model can be adjusted to accommodate for any special offers. Looking at my trades history, it's not immediately clear to me what currency is used for fees. I've seen it all. I've seen BNB, USDT, BTC. So for clarity and consistency, in the spreadsheet I will use USDT only. The buy fee is charged on the buy order size, and the sell fee is charged on the sell order size. Now, potentially for huge order sizes and huge markups, the amount of sell and buy fees will be quite different, even though the rate stays the same. That is why I have different columns for each, and also a total fee column in USDT. For the same reason, I have also added a total fee rate, which is the total fees paid as a percentage of the buy order size. Lastly, we have the net profit, which is gross profit less the fees, and also the ROI, which is return on investment. I've calculated this per this formula, and I've included it here just because I can. See, both columns are color-coded to show profit or loss. By the way, we'll take a closer look at ROI and what it means in a later video. Now let's play around with this beauty of a spreadsheet and see what it tells us. Fees or no fees, if the sell price is below the buy price, you always lose money on the spot. Next, as long as the sell price is higher than the buy price, at 0 fees, you always make money. How much is only a matter of the order size and the markup. Now, once you factor in the fees, it gets quite interesting. Let's use the example of my first trade from the previous video. My combined buy order size was 19.68 USDT at the average price of 17,893.1, and I sold the whole thing at 17,920. So let's plug that in. I'll just adjust the markup here to get us to 17,920. Here. Excellent. Here are my 3 cents in profit. Now check this out. The fee rate is now 0.1%. A totally different story emerges. I keep losing money on fees up until the price gets to 17,929. Let's dig a bit deeper. To earn those same 3 cents in profit with fees, I would have had to sell at 17,956. Now that is a big difference. So let's find that critical point where losses turn into profits. It is right here at 17,929, and in the very simplest terms, this is exactly where the total fees paid become smaller than the gross profit, and both of these are USDT values. But let's find more useful values to compare, since the absolute monetary values of fees and gross profits are quite far removed from what we see on the trading screen and are dependent on the specific pair we are trading. Let's move from absolute values to relative values, which are known and visible no matter the trading pair. These would be the total fee rate and the price change. These are clearly aligned with the break-even point in the spreadsheet. Firstly, at modest order sizes for the complete trade, the fee rate is known to us beforehand. It is twice the rate specified on Binance. Remember, it's twice because in my definition of a trade, there is always a buy and a sell. Secondly, the change percentage is visible right here on the trading screen. Of course, before placing an order, you have to convert the desired level of change into absolute values. But that is a good indicator and a good starting point. Wouldn't it be nice if Binance allowed you to input just the target change percentage when you sell? Can't we all dream? By the way, the same approach works for lower fees as well. Let's plug in 0.075. As soon as the price change becomes greater than the total fee rate, we are in the green. So here we are, a long, detailed answer to a short question. That was very useful to me in understanding the inner workings of trading. So now the next step would be to move to a real-world application of this analysis. I am planning to update the spreadsheet and turn it from a research tool into a usable trading aid to help me make quicker decisions when placing orders. Everything is happening so quickly on the market and on the trading screen, so I need all the help I can get.